Hello guys, welcome to our webinar. It's 4 o'clock, time for it. Let me know please if it's all working fine, if you can hear me properly, if you can type it in the chat to be sure that we can start. Let's see, people keeps joining. Let's give some seconds for people starting to join. Hello, Stavros. Guys, you have the option of the chat if you want to send some message, some questions. I will keep an eye on it. And I hope it's working fine. Hello, Ratko. Hello, Ali. I hope it's working fine. I hope you can all hear me well. If it's the distance with the microphone is enough. Hello, Ebna. So we are holding a webinar today regarding some news that we can use in our favor to trade. Some important news because trading can be also related to the chart, to technical analysis, but this is also fundamentals, some news that we can pay attention to them. And we have selected some of them that will for sure help you in your trades. So let's go. My name is Ismail, by the way, for the one that don't know me. I am an account manager in IQ Option. And let's start our webinar. Okay. Good. I believe now you can see a slide, major market events, called What to Expect. You should be able to see a slide from the presentation. And below there is a disclaimer. I would like you to take a minute to read because trading includes a risk, of course, and we have to be aware of it. Okay, guys, let's go. So what we will do in our webinar, we will explain some market news. We will talk as well about companies, okay, market news that will affect the Forex market, the currency exchange. We will talk about companies, earning calendars. We'll have soon Q3 earning calendars. And as well, I will want to explain you a strategy that we can use as well. So it's a very complete webinar. We have fundamentals, we have some technicals, we have strategies. Let's do it in a dynamic way, participate, leave messages on the chat, let's interact, and of course, question and answers at the end. So here you can see a selection, okay? We have chosen relevant news that I believe the market can notice a change while these news are released, either long-term change or maybe a short-term, I mean the 30 minutes or 1 hour after the news are released, and then the chart can continue the previous trend, but during this news, the times are released, more volatility is expected in the currency pairs. As you can see, there is building permits, CPI, retail sales, consumer confidence, durable goods, GDP, personal income. All of these are important at 3 stars. As you can see, we have the time when the news are released, the currency that will affect the news, the importance, 1, 2, and 3 stars. Normally, it goes from less to more volatility. event, when will happen, the date, and on the right side you can see the previous result. You can see the forecast, what is expected. For example, the CPI, the previous result on year, okay, YOY means year on year, it was 3.4%. The forecast for this new CPI will be 3%. It's a forecast, and the actual, we don't know yet. We will know the 20th of October. We have highlighted 4 of these news to go more in deep. But of course, if you want to, we can explain any of them. You can leave your question. Let's start. EU Consumer Price Index. So what is this? This is called the CPI. This will affect the Eurozone, the Euro currency, 20 October 2021, at 10 UTC plus 1 means London time. Okay, 10 London time. And we have a forecast of the 3%. The actual, we will know. And what this index measures, it takes the change in prices, okay? How much or how less we are paying for the same cost of living, okay? This is conducted normally through surveys and researches. As you can see, in a more written definition, the change in prices of goods and services from the perspective of the consumer is a basket of goods, and it sees, okay, the change in that price for that basket of goods and services. It's related to the inflation because an increase on the price index can be a reason because of an inflation in the market. And normally this will tell us how to trade. How to trade if the result is bigger than the forecast might make the euro stronger. If the actual result is below the forecast, might weaken the euro. And very important because, and I'm glad that we have this CPI for today, because yesterday it was the CPI for America. You can see it in the economic calendar. I will share later the link as well. In the economic calendar yesterday at 1:30 London time, it was the CPI for the US. It affected the dollar. And the actual result met the forecast. And you can see how at that time, the dollar got stronger. Half an hour later, it recovered the previous price and continued the trend. But in that time, it was a high volatility. Why a CPI higher normally strengthens the currency? Because we guess or we think that we may need more dollars maybe to buy what we used to. And also in the long term, it may have an effect on the inflation, and that makes interest rates normally to go up for government to avoid or to reduce the inflation. And when interest rates are high, we want to save our money in the bank because we get a nice interest. Or if I am in Europe, I will buy dollars to save them, maybe in treasury yields, because the return is very attractive. So I will have to buy dollars. Normally that strengthens the economy, the currency on a long term as well. A higher CPI normally might make the currency stronger, while a lower weaken. Retail sales. This is similar to the CPI. It's not an index now, it's a percentage. Retail sales, we don't have the forecast. The 22 of October, the release date, we don't have the forecast yet. We will have it soon. Maybe 1 day, 2 days before we will have the forecast on the 22 October. And it's month on month, okay? Month over month. It's comparing from a month to another. And the retail sales are the consumption, how consumers are behaving, okay? Consumer spending it is what creates economic activity. And the retail sales measure the change in consumer spending from month to month. What this means? It means if I have an economy where the retail sales, okay, the people are buying, keeping spending their money, it means that the economy is healthy. It means that the people are not afraid to spend because they believe they will keep their employment, they can find new jobs. There is happiness in the economy, if we can say it like that. And that normally affects positively the economy and the currency as well. So a higher number in the retail sales will probably, maybe, mean the currency to get stronger. If it's lower, the markets understand that, country is not spending, what's going on, that may affect negatively the currency. Consumer confidence. Okay, this is an index. This is in America. Okay, this will affect the dollar. It's the 26th October at 3 o'clock London time. And this is run through surveys. Okay, this is there's companies or also universities sometimes that run surveys around the country, and they ask about your job, your future plans, if you are planning to go on vacations, these kind of questions. And this is how they measure a situation on the economy. Okay, if people quite related to the retail sales, similar, it can tell us information about the health of the economy. Here you have it, measures the level of consumer confidence in economic activity. For example, the consumer confidence, if you take the historical one, in the times of the pandemic, it dropped amazingly in the chart of the consumer confidence. They were running the surveys, but people were not confident on the economy. Yes, my connection is poor. Tell us our friend Machufri. I read the recording for replay. We will have the recording, of course, and it will be sent to all of you. So a higher than expected number in the consumer confidence will make the currency stronger. Okay, this is a similar definition as before. It's a trust on the economy, of the local economy, on the national economy. The markets, the investors understand that that economy is doing good. People are working, people are spending, so the currency gets stronger. US GDP growth rate, quarter over quarter, okay? It can be year over year. Now we are comparing quarter over quarter, how it changed from a quarter to a quarter. Now we are entering now we are in quarter 3. Every quarter is 3 months. So what is the gross domestic product? The GDP. GDP is normally the king of the macroeconomics indicators because it measures the change in goods and services produced by the economy. Okay, because they calculate it. It's GDP. It's equal to consumption plus government spending plus investment plus net exports. It adds every signal of the economy onto that, and it normally tells us how strong is an economy. Okay, then we have the GDP per capita, that we include the population, but the GDP is also quite relevant. Of course, higher GDP will mean that the economy is strong and will make the currency stronger. If the GDP, let's say, forecast we have 5.1 and suddenly America only grew at 2%, that will mean that it's not doing as we expected. Something is wrong in the economy, and people will be maybe afraid, the investors, and search another economies when you leave maybe your investments in America, you are getting your US dollars out of the market, you are selling them, that may make the dollar to get weakened. Now time for the strategy, okay? Time from the strategy that we mentioned before in the when we were starting. This is called strangle strategy, okay? This is a way to trade before news, and especially, and more important, because this is how it works, the strangle strategy. If we expect that some news or something is happening at a time, I know that at 4 o'clock, a CEO will speak about its company, or I got some macro news, very important, anything, okay? Because this strangle strategy can be used in stock market, in Forex, commodities, anything except Forex options, okay? Except Forex options, but it can be useful everywhere, as long as we expect a high volatility. If I know a high volatility, but I don't know in what direction, I know there is a meeting, and that meeting will create high volatility, but I don't know bearish or bullish, triangle strategy can be what we are looking for. Let's see what we have here. We have a flat chart. As you can see, it's moving range side. Nothing is happening, green, red, small green and red candles, but suddenly here, you can see we have a big green candle at 3:30. Okay, this is an example we have taken from the NFP, from the non-farm payrolls, which is an indicator of the employment in America. And normally it's quite volatile. Okay, normally markets are very attentive on the NFP. And in this example, we had the situation that we were looking for. So see that our candle went up 37 pips, that green candle, at 3:30 exactly, okay, at the time that the news were released. What can I do? How can I trade? I don't know if it will be positive news or negative news. So here is it. I may open a buy position. I don't know. But results will be positive for the economy, negative, I don't know. But I expect high volatility. I open a buy position and I set a buy order and a sell and a I set a take profit and a stop loss. As you can see, the take profit is 20 pips. Okay, this space here are 20 pips. And my stop loss, okay, the position will be automatically closed if it reaches 10 pips losses. Okay, so here I win 20, here I lose 10, right? Okay. At the same time, I open a sell position. I repeat, I don't know what to expect of the NFP, so I'm hedging my position. I'm covering both sides. And the sell position, I apply the same numbers. A take profit, it reaches 20 below, and a stop loss if it reaches 10 pips above, right? What are my results in this case? In this case, the next candle went up till here, 37 pips, but we have setting only 20. When the candle starts to grow here, my stop loss from the sell position will trigger and will be closed. Okay, so now I have a loss in my balance. I have a loss. This sell position doesn't exist anymore, but still I have it the buy, and the buy is making still up. And when it reaches here, it will be automatically closed as a take profit. 20 minus 10, this space here is my green space, is the profit space. I'm making 10 pips thanks to this strangle strategy. And I repeat, please, you only should use this strategy if there is high volatility expected soon. There's no sense to make strangle here, guys. You can see, okay? Only when it's high volatility because of some news or something. And of course, doesn't mean that for sure, because nothing is granted on trading, but it's a way that can help us. Let's go with earning calendars. This is similar to the market news about Forex, but now we are talking about the companies. We are talking about the stock market. And stock market, it's about companies, public companies that has to be, they have to be transparent. They have to release and publish their situation. They are selling, they are not selling, numbers. They are making profit, if they are making losses. That's why if they are on the stock market, it's because all their results are public. Okay. Here I have between the 16 and 31, we have these ones: Netflix on the 19th, Twitter 26th. We have selected the most popular ones. There are way more, okay, because every quarter we have earnings calendars for every company in the stock market. We have selected the more popular ones: Amazon on the 28th, Google, Alphabet, Tesla, Coca-Cola, and period, of course. And we have forecast, previews, and time. Okay, time. What's important about time? You see moon and you see a sun. It means when these results, these earnings, are released. It means either the moon before the moon after market closes, or the sun before market opens. So if we are in Europe, it means that the stock market normally is open during the afternoon and night. So if we have a sun, like in Twitter, it will mean that in the morning we will know the earning calendars. If it's a moon, like in Coca-Cola, at night after the stock market closes, we will have the earnings calendar. These numbers that you see, it's the earnings per share. Earnings per share. And it's also a way to make the company attractive to investors. If let's see, if I see that there is an improvement, I am a shareholder of Netflix, and they are paying me $1.74 per share owned, and the forecast is 2.55. Well, there is a big difference here. I will be happy. I think Netflix is paying well to the shareholders, are increasing, and I may invest more. Price may rise. These are positive news. Okay, always in green shows positive news, and in red a negative, a decrease. Okay. So we are waiting for the actual. Let's see, for example, you can see Tesla, that is almost the double, from 0.76 to 1.39. If the actual, it's even, imagine 1.5 will exceed the forecast, and it can cause a bullish run. People wanting to be part of Tesla. We have some questions in the chat. We will answer all the questions, guys. I'm happy you are participating. So about Tesla, I wanted to focus a bit about one of these companies. Tesla is performing well. It's selling more and more cars every time, and the forecast is $1.39, way more than the previous one, plus topped expectations with car deliveries. Plus, we got a company, Whitbush Securities, which is a wealth management company that does investments and stuff and advisements. So according to them, according to Whitbush, there is a target of $1,000. So imagine Tesla is selling goods. Tesla is making money. Elon Musk, richest man in the world, keeps investing. The technology keeps growing. They are delivering more and more cars. And the earnings per share are increasing. That can make the price of Tesla go up. If right now it's around $800, according to Whitbush, for now they see it on 1,000. So a higher than expected result on the share on the earning per share can make the stock higher, and a lower can weaken it. Okay, here we have again the economic calendar. I wanted to show it again in case you want to maybe take a screenshot or ask a question about any of these lines. You guys, the forecast, the previews, the meaning of each one, the currency affected. Okay. Also beware, as you can see here, the forecasts are not a reliable indicator for your performance. It means that nothing is granted. We talk always from historical perspective, and according to history, this has happened when the results were positive or negative in some indicator. That's why that's how people trade, no, based on the past. But of course, it's not a grant for the future. Here you can see our link for the economic calendars, and also the earning calendar for stock companies. IQoption.com, you will have there updated every time the new forecast and the news and the new final results. So thank you very much. I hope you have enjoyed. I hope we all have learned something new. I hope this webinar was useful, and it's to sum up, I think keeping an eye in general on the news, keeping an eye on the economic situation, what's going on in the country that we are investing the currency with, right? If I trade euro, if I trade dollar, if I trade the sterling pound, what's going on in England, in the UK, what's going on in Europe, what's going on in America, corporate debt, government debt, numbers of inflation, CPIs, employment rates, all of this, I think will help at least to take a more trusty decision on your trades. And normally, the more information we have, always, the more information we have, the more chances of a successful trade that we can have. So let's see, some question, guys, if you may want to ask something. So we have a question from Daniel, I can see. Is it common to trade NFP also like this? Just wait for the action number and know which way it will go, because I know if the action number is higher or lower. Okay. Good question, Daniel. Good question. You can wait, and if the number exceeds the forecast or is quite below the forecast, is when more volatility we will have. When the forecast is met, let's say we expect 2 and the forecast is 2, there's not much volatility because we anticipated, okay? The markets anticipated already. If we see a big divergence from the actual and the forecast, we will see more volatility. So what I mean with this, you will have time to jump in. We have time to jump in. If the candle starts to become green or red, it may last for 5-10 minutes, 20, depends on the situation. You may have time to jump in and maybe get some profits. The other way is to already set an entry point, because when the flat is chart, when the chart is flat, you have the good entry point. You still are here. You are not entering here. Maybe here is too late. But when the flat is chart before the storm, before the news are released, you may get a better entry point. And then you can use that strangle, or if you think that how the result will be, and you can anticipate the direction, even better, you can directly trade on it, on the way you believe. Yes. You want to ask any more questions? Remember also that we will hold a new webinar at the end of October. You will be able also to sign up, to prepare some questions if you want to take time for preparing some questions you would like to ask, and more than happy. And the next webinar will be about the first half of November news, and we will be doing it at the end of October. Thank you, Daniel. Thank you. Guys, always, as I said before, and sorry I didn't mention it, just to keep it in mind, trading, I said, is about technical and fundamentals, yes, but also about the entry points. We have to look for nice entry points. Even if I got an upward trend, the chart keeps going up, but I enter here, and then maybe it flats and goes down, was not an entry point, right? So we have to look for the nice entry points that we will get that space to make profits. It's important. We cannot just follow the rush, not paying attention on anything else. I just see it's here, but maybe I just buy so expensive. I bought so expensive that I bought in Maximus, for example. No, so entry points. It's also the key of trading. I hope you all enjoyed this webinar, and it was a pleasure for me. Thank you very much, and see you soon. Bye-bye.